In 2026, Americans will spend $7 on a coffee, $9 on a fast food meal, and sometimes $15 for a cocktail. And yet somehow, there's still a giant can of AriZona iced tea sitting in gas stations across America for 99 cents. Not $1.49, not market price, not premiumized, not subscription-based, not dynamic pricing, 99 cents. At first glance, it looks like nostalgia, but the longer you stare at it, the more you realize that little green can contain one of the most important business lessons in modern America. Because AriZona Beverage Company did something almost nobody in corporate America does anymore. They chose permanence over extraction. And in doing so, they may have accidentally exposed everything Wall Street forgot about capitalism. Modern capitalism tells us there's only one way: raise capital, scale aggressively, leverage debt, optimize margins, appease shareholders. Everything becomes financialized, everything becomes optimized, everything becomes a spreadsheet. But AriZona Beverage Company ignored almost all of it. They stayed private, avoided massive debt, maintained control, focused on cash flow, built distribution, and instead of squeezing consumers for every last penny, they built trust. That sounds simple, but in an economy addicted to leverage and extraction, trust is actually revolutionary. Think about what happens when a brand becomes successful. Private equity shows up. Margins become the obsession. They want pricing power. Translation: charge people more, shrink the product, increase the price, reduce quality quietly, use branding to disguise the downgrade. But AriZona did something dangerous. They made the consumer feel like somebody on the other side of the transaction still had a soul. That giant 99-cent label became more than a price. It became a statement, a declaration that said, "We are not trying to screw you." Most corporations can't hold prices down. They're trapped inside financial machinery, debt payments, shareholder expectations, growth targets. Once a company becomes financialized, it stops behaving like a business and starts behaving like an extraction engine. Every quarter demands more. Eventually, the customer notices. The product gets worse. The pricing gets insane. The authenticity disappears. The business is spiritually dead. AriZona escaped because it remained controlled. That's the key. Ownership matters, control matters, infrastructure matters, cash flow matters. The goal of capitalism is not to create the most tradable asset. The goal is to build something real, something durable, something people trust. This is the part Wall Street hates hearing. Sometimes slower is stronger. Sometimes private ownership beats public markets. Sometimes boring cash flow beats venture capital. Sometimes cultural trust beats financial engineering. 99 cents beats the hedge funds. Capitalism, at its core, is supposed to be about voluntary exchange that benefits both sides, not extraction, not infinite monetization. The healthiest businesses create ecosystems where the company wins, the customer wins, and the relationship continues for decades. That's a trust machine. Americans are starving for this right now. People are exhausted. They feel squeezed from every angle: subscriptions, inflation, hidden fees. So when they encounter a company that doesn't behave that way, it stands out. Not because the product is magical, but because the philosophy is rare. That 99-cent can represents something bigger than tea. It represents restraint, and restraint is almost extinct in modern capitalism. There is a difference between maximizing profits and maximizing longevity. One optimizes the next quarter, the other optimizes the next generation. Maybe the 99-cent can is a reminder that capitalism works best when grounded in reality: ownership, discipline, production, trust, permanence. The company that refuses to squeeze every dollar becomes unforgettable, and that might be the most valuable brand strategy of all.